Hello, everyone. I'm Airav, and you are tuned in to the 657th episode of our Here and Now podcast. Today, we bring you the latest buzz from the insurance industry, so let's dive right in. Our first story today comes from Business Standard. The Union Budget has introduced a significant relief for motor accident victims. From April 1st, any interest awarded by the Motor Accident Claims Tribunal (MACT) will be exempt from income tax and no tax will be deducted at source, regardless of the amount. This measure is expected to ease the financial burden on victims and their families while also reducing litigation for insurance companies. By addressing long-standing ambiguity around the taxability of MACT interest, the proposal ensures smoother compliance and quicker settlement of claims. It also eliminates disputes that often arose from TDS deductions which delayed compensation. Experts view this as a step towards strengthening a citizen-focused insurance framework, encouraging wider adoption of motor cover and guaranteeing that accident victims receive full financial support when they need it most. Overall, the move signals faster, fairer, and more efficient claim resolution. Moving on to our next story from the Pioneer. Budget 2026 marks a clear departure from dramatic fiscal measures, choosing instead a path of continuity and stewardship. Rather than relying on tax giveaways or short-term consumption boosts, the government has shifted focus toward leveraging existing assets to generate greater economic value. Capital expenditure remains elevated at 12.2 lakh crore rupees. But what stands out is the emphasis on asset recycling. State-owned land and real estate will be monetized through REITs, transforming dormant holdings into income-generating instruments without expanding the fiscal deficit. This signals a philosophical change, treating asset monetization as routine capital efficiency in line with global practices. Alongside, the Infrastructure Risk Guarantee Fund is designed to de-risk projects and attract private capital. While affordable housing saw limited direct support, indirect benefits are expected through improved connectivity and institutional investment, especially in Tier 2 and Tier 3 cities. Overall, the budget reflects confidence in investment-led growth, prioritizing long-term employment and infrastructure creation over immediate consumption stimulus. Our next story today comes from The Hindu. Karnataka coffee farmers are turning to the Union Budget 2026 with hopes that climate-linked insurance coverage will finally include their crop. Coffee, which contributes more than 70% of India's production, is highly vulnerable to unpredictable rainfall, droughts, and other climate risks. Yet, it has remained outside the scope of schemes like the Pradhan Mantri Fasal Bima Yojana. Farmers argue that this exclusion leaves them financially exposed, and they are urging the government to subsidize most of the insurance premiums, similar to the support extended to tea and rubber growers. The proposal is seen as vital for stabilizing incomes and safeguarding livelihoods in a sector that is both climate sensitive and export oriented. By bringing coffee under such insurance, the government would not only protect farmers against losses, but also strengthen the rural economy and ensure long-term resilience of India's coffee industry in the face of rising climate challenges. Our final story today comes from Asia Insurance Review. India's Union Finance Minister has presented the Union Budget for 2026-27, laying out an economic roadmap anchored in growth, investment, and fiscal stability. The insurance industry has responded positively, highlighting the budget's focus on stronger cash flows for MSMEs, deeper formalization, and sustained investment in healthcare and skills. For insurers, this means a larger base of insurable assets and wider opportunities to expand protection across households, enterprises, and infrastructure projects. The budget's emphasis on capital expenditure, urban renewal, and climate resilience is expected to deepen insurance penetration by tackling risks linked to income, volatility, climate change, and infrastructure gaps. Measures such as the SME Growth Fund, support for self-reliant businesses, and reforms in motor insurance are seen as steps that will improve liquidity, strengthen trust in claims, and broaden coverage. Overall, the budget positions the insurance as a core element of India's growth model, supporting resilience, financial security, and inclusive development. And with that, we conclude today's episode. We hope you found these in-depth updates helpful and insightful. As always, our podcast Here and now, we'll continue to bring you more such stories from the world of insurance. Until then, take care, goodbye, and have a great week ahead.